Joining me to discuss the current market trends at midday is Kearabilwe Nonyana from Prime Scope Africa. Kearabilwe, thanks so much for your time this afternoon. So, markets kicking the week off pretty mixed. We saw US stocks decline on Friday following that downbeat consumer confidence print. I guess that just filtering through to Asian markets and then filtering through to our markets. These inflation fears just don't seem to be subsiding just on the back of those tariffs, right?
Yeah, I think they're not going to subside up until there's really a lot of clarity in terms of how these tariffs are going to go and if they're going to spark trade wars. Because I think the retaliatory tariffs are going to be the start of brinkmanship between the US and many other economies in the world. And essentially, that's where the inflation fears still rise right now. And I think for as long as that uncertainty remains in the market, you'll still see quite jittery, volatile markets, even though the S&P 500 is almost up 4% for the year.
So volatility, the name of the game as we move forward. What have you made of the Rand's performance, Gia? It managed to shrug off that budget delay. We did see some weakness coming through, but that quickly disappearing. This morning, I see it's still quite stable despite, the load shedding risks we had throughout the weekend. It seems to be holding up really strong.
That's true. I think the Rand remains very resilient because South Africa faces a lot of problems which are of its own making. But I think right now it more has to do with dollar strength, in the sense of the dollar has been strengthening for a very long time. But if you look at the dollar index over the past week, you've started to see that dollar strength subsiding. And I think that's why you're seeing currencies like the South African Rand just really remaining very resilient. I mean, I think it touched about 1830 at a point in time in early morning trade, which is really good. And even at that level, I still think the Rand is very undervalued.
Let's move over to some company news. Prosus expanding its European reach by acquiring Just Eat for 4.1 billion euros. Just Eat hasn't had a good ride post, I think, COVID times, right? And, I just like to get your analysis around this move in particular, because even looking at Prosus's share price, Naspers' share price, it doesn't seem like markets are happy about this move.
I think really Naspers and Prosus are sitting on a cash pile of about $20 billion. And right now, I think the market does not want them to be too hasty to pull the trigger on some of these acquisitions. Because if you're looking at the past 4 quarters, in terms of performance for Just Eat, they haven't really been doing well. You're seeing that margin compression. You're seeing revenues down as well as EBITDA down. So for them, I think the silver lining is getting access to these 17 markets which they're operating in, and they have a database of about 61 million clients, which is the size of our country. Which I think if you have that database, you're able to then be able to mine that database to improve the efficiency. And I think for Just Eat, it is just one of those things where they're getting a big brother who has deep pockets and can help them bed down their strategy in those markets.
Do you expect to see more of those acquisition moves from Naspers Prosus? I mean, I know Bloisi has said that they're quite, bullish on acquisitions at the moment. I think they just recently bought a travel agency in Brazil.
Correct. In his recent statement, he says they are looking to pull the trigger on a lot of acquisitions. But the question with Prosus is, are they ever going to get any of these acquisitions to be as cash accretive and as lucrative as Tencent has been for them? Because if you really do a valuation on Naspers, the rump of the business is still Tencent. And essentially, they got this new CEO to come in and to start making money from the other businesses. Do I still think there's value in Naspers? Of course. Even though it touched all-time highs, I think it is a well-run operation, and the fact that they have access to China through Tencent still gives them that advantage and makes them quite a different value proposition for investors on our local bourse.
And also interesting to see how well Tencent has performed, even though we've seen downbeat growth in China. Let's move over to Sasol. They've reported over 30% decline in interim profit due to falling oil prices as well as lower sales volumes. That group, also one that's been, struggling for quite some time. Will we only see an improvement in Sasol when we start seeing a recovery in that oil price?
I have a wait and see approach to the stock. I have such an affinity to Sasol because there's no other company on our local bourse that does what they do. And I think, as I said, in terms of value proposition for fund managers, it really gives them an entry into a different sector. But you see, the problem with Sasol comes down to if you can control what you can control. That is when a good management is really tested through the tough times. I mean, there's a lot of things in terms of the price of oil that they can't control. But what's also happening within this corporation is they're not controlling what they can control. And I think that the worrying signs have been there for a very long time. But I think something that I took out from these results was the negative free cash flow of about 1.1 billion. When a company cannot generate free cash flow for its normal operations, that means they're returning negative returns to their shareholders. It really is not looking very good for Sasol. Even though we have an affinity for the stock, I think as shareholders of the stock, there really needs to be a lot of questions to management.
And looking at that share price, I mean, at some point it was at about 79 Rand, I think, last week. I'm looking at it right now. It's about, it's at just under 90 Rand. And it's just very interesting to see those movements taking place, even though now we do have new leadership with Simon Baloyi at the helm. There's also been talks about spinning off Lake Charles. Just a lot of corporate action taking place there.
There's a lot going on, and sometimes simplicity is what matters in running a business. And I think where we've seen the share price go over the past few weeks is then there'd be a lot of institutional interest then that props the share price up, and then just find selling at a barrier, right, as you said, around 89. And I think that has to speak to more about confidence and where the trend is in Sasol. The trend is not looking up. It really is it truly is a painful chart to look at. And I think for me, what's going to be the catalyst is what the new management team really does with these operations, because I still think that some of the assets that they have within their stable are some assets that can generate value for their shareholders.
And we'll be hearing from Simon Baloyi later this evening on The Close. Before we get into some of the stock picks, I want your take on Altron. They're expecting to deliver double-digit earnings growth. Netstar seems to be, driving growth on that front.
And that's truly the crown jewel within that stable, and I think they've really done well. But I think what's even more commendable is the operational efficiencies that the management speaks of. And it goes back to what I said. If management can control what they can control, you get results like Altron has just produced. And truly speaking, it is quite a small stock to follow, and one that does not have much interest from institutional buyers. But I think it's a well-run operation, and the management team there have done very well.
All right, let's just hit pause on the conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
So I was punting Sasol the other day in the 70s. The shares bounced into the 80s, and I'll continue to punt Sasol. I would say there are three reasons, and the one is a recently emerging reason, and that is that in the budget, which was given to journalists, leaked, and then not read, there was an announcement to postpone the carbon tax that Sasol would have had to pay. And this is obviously an environmental legislation that was coming, but it was going to be very expensive for Sasol. It was going to cost them between 3.5 and 7 billion. This is now delayed, and that is one of the reasons why the Sasol share price has bounced up from late 70s into the mid 80s. I think the other reason to be bullish Sasol, as I said previously, is that I think Simon Baloyi is a good chief executive, and I think he's at last trying to extract value from these assets. And if they were to sell Lake Charles, that could easily be 50% of the Sasol's market cap right there. I think results on Monday, and we'll know more after that.
Darling, my pick is Alphabet. So I think US markets are a bit stretched at the moment, but on a forward PE basis, Alphabet's on 20, which I don't think is excessive compared to the rest of the S&P 500. They've got a very strong balance sheet and lots of businesses under the hood there that are phenomenal. If we look at YouTube just as a standalone business, revenue is about $50 to $55 billion. That's more than Netflix. So I think they're a phenomenal business, not excessively priced, strong balance sheet, great businesses under the hood, and that's why they're my stock pick today.
So we did speak about Sasol, and I guess at the heart of it here, it really is about management and just management changing that business. What are your takes on Alphabet then?
Yeah, I think Alphabet is really a great company, and you just have to look at what they have within their stable and the growth within those businesses. I mean, as you said, YouTube subscription revenue up about 7%. You're seeing that Google Cloud is up about 30.8%. They almost generated almost 100 billion in the last quarter in revenues, and that goes back to, as we said, management. It's a great management who are finding operational efficiencies. I think the problem that you stuck with these companies is, can they keep on growing revenues? Because some of these valuations are a bit of a stretch. Yes, a forward PE sitting at about 20.9 is not a cheap PE, and I think it really speaks to how well the business has done. But right now, the market is going to be very jittery, and the question is when that door closes, how close are you going to be to that door to get out of some of these tech stocks? And I think that is my worry, and my only worry with this great company, which I think you really can't find one across the world that does as well as Alphabet.
All right, so let's get into your stock pick.
Yeah, my stock pick for the day is just a short-term trade idea on Just Eat Takeaways. I think it's not a company that has done very well, but the premium that Naspers has offered for the stock is close to about 50%. And looking at trading today, it's trading at about 18.97 euros, because even if you buy it at that price and the exit price that Process has offered for that stock, you're still making a good 10% on that. And I think that is my stock pick for the day.
Yeah, thanks so much for joining us today and taking us through trade at midday. That was Kearabilwe Nonyana from Prime Scope Africa.